Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, posting an engulfing candle just a couple of days ago, the market is still a little bit apprehensive as it hovers around the 60-day simple moving average. Looking ahead to this week, the Australian dollar faces a crucial week with traders focused on the Jackson Hole Symposium in Wyoming, where Fed policymakers will search for clues on the path for rate cuts that could push the Aussie pair higher. This year's meeting follows mixed signals from consumer and wholesale inflation data, rising questions about how well the US economy is holding up under Trump's sweeping tariffs. With the economic calendar otherwise light, the highlight for this Friday looks towards Jerome Powell against the backdrop of weak labour data and also rising inflation. So as we can see by the technicals, the market is likely to post further gains and maybe look on towards the region of 65.5 to 66 cents. Eyes will also be on the RBNZ, which widely expects to see a rate cut by 25 basis points to 3%. The euro dollar was also a little bit mixed, but still holding to a bullish bias, and I still feel there is further upside potential that is on towards 117 figure 20. We do need to see a break there to see the rally on to 118, with any pullback likely to be shallow. Turning to dollar yen, well, the technicals are still somewhat weak, and I still feel there is further downside risk, and any moves above 147.65 could present another bull trap. And if so, the market likely to plummet towards 146 to about 145.5, which is still the bull target. Sterling also holding to its trend, even though the market is a little bit weaker today, but looking overall to the climb up to 136 to 137 as a potential target. And wrapping up with commodities, markets rebounded off this support area, seen around 3,320 to 30, and may even show a further bullish gain as an engulfing candle is developing, and therefore rally on to the region of 3,400, which is still the broader call. A week holding above that 61.5 mark, and therefore looks for further gains as divergence is still there, and maybe rallies back to $64 a barrel. Well, that's a wrap. Thank you for joining me. As always, we're covering the trade report. I hope you enjoy the great start to the new week.